think this whole theme of leading beyond finance, shaping the future, is very much the need of the hour. And there is no good a time as today to think and act on this. Uh, it is also the time to also share with you, while I think two words, CFO and CEO, we will be listening all day interchangeably. I'll try to avoid this word and talk about us. And when we say us, I am referring to these two syllables interchangeably. And while we talk of these roles, let's not forget that any functional head or a CFO cannot work without systems, process, control, and governance, which sometimes can get left behind. But I'm literally not leaving it behind by having my third line of defense in Surya Nepal, my divisional audit manager. She's here right with me, lockstep. So, as a CFO, as a finance person, we cannot let behind our basics in terms of systems, process, and governance. Uh, I must also thank the earlier speakers. Beautiful words. One, of course, was Chief Future Officer, and the other lovely sentence of CFO being a firewall. I think I'm literally carrying my firewall here with me. With this, I move over to the slides, and please feel free. I would love to answer any question and be more than happy if we have some thoughts at the end of this. So essentially, this is in two parts. CFO is a strategic navigator and the next gen CFO. There is one very clear outcome as a result of it, that the person who only reports number will, and I think there is no guess for filling up the blanks over here. Whereas the gentleman who interprets numbers, influences decisions, and creates value will. I think it's very clear, right? The first one will get replaced by something, something. The second one will create enduring value and possibly remain relevant for eternity. I think that's the key theme of what I'm intending to cover. If we look at the paradigm of a finance professional over a decade, and we'll realize that over a period of time, the roles have evolved, not just in terms of what the person does, but also as a designation, right? From an accountant to steward. And today, as we speak, I think we are at the crossroads, navigating between our role as a business partner and strategic navigator. But hold your horses. We're not very far away from adding one more word, architect, which belongs to another profession, which will be coming up on us sooner rather than later. On how are we driving businesses as a value architect? Uh, Clearly, and I can tell you from myself, and I'll cover this later in my role over here, this is moving well beyond reporting into shaping strategy, harnessing technology, and the long-term enterprise growth. Let me give you an example. So this is about an auto company in the Asian subcontinent. I think what was happening over there was this post-liberalization slowdown. Things were not easy. The vehicle industry was impacted, and there were not just enough happening, even by traditional elements of cost cutting. Here, the classical role, which came to light, and they were, of course, running into losses of more than 500 crores. So this is what the finance leadership did there, along with business, looked aggressively at cost transformations, working capital, strategic acquisitions, changing the performance measures with clear outcome of profitability and growth for the enterprise. What does this tell us? This tells us very clearly that the companies which are high performing have a very, very strong CEO and CFO alignment on the strategic priorities. There is clearly a shared accountability for outcomes and one communication across the company. It is not what the CEO thinks by himself or what the CFO thinks or what the CMO, the marketing guy thinks. It's one communication across the company and joint ownership of all decisions. I think that to me is one. While there are some international case studies, I'll not take your time on this. I think that the point is very clear that we need to move beyond reporting to predicting and then to prescribing possibly. The question today is what should we do rather than coming to office in the morning, opening up our screen, trying to open some ERP and understanding what happened yesterday. That cannot be what we are doing today. It's about what should we do, where should we invest, and what will happen as a result of what happened yesterday. What are the choices to be made? I think that is a clear shift which we need to make, because if we look at a car, right, all of us utilize vehicles. If finance is the rear view mirror, strategy is the windshield. So the question really is, if you were to do a time study or a time motion analysis, how much time are we spending on the past versus architecting the future? I think that question is reshaping not just the role of a CFO, but of the entire finance function. Uh, we can do a quick show of hands. Am I wrong when we say that most of us spend more than 50% of time on reporting on the past or analyzing the past? Quick show of hands, please. Is this right? Are we spending at least 50% of our time doing that? I'm 100% sure. Thank you, sir, for being honest. It's true for all of us here. So we need to gradually have a glide path to move ahead. This is about this is about me a day. So I'm part of Surya Nepal in Nepal, and we're a subsidiary of ITC. We've been there for the past 2 decades. What does my day look like? It's about actioning insights from what happened yesterday. What are we doing today? And more importantly, planning for tomorrow. And these are the verticals uh, where there is direct action from my side. The first thing to do is it's a very busy slide, but the important point is we can't be aloof from the economy. So all of these indicators on the chart is very critical, and we need to understand this on a daily basis to drive our decisions as a business. What is happening to the economy? A, internally within the country, and B, what are the external factors over which we may or may not have control, but are clearly shaping our direction and the decisions we make. All of this is relevant, and we need to be abreast of it while we work and make decisions as CFOs. So this is what I do. One of the key points on how we can help businesses in building supply chain resilience is, I think most of us are very clear, right? We have literally been living from war to war. First was Ukraine, Russia, and we have moved on to another, West Asia. We need to figure out when is it ending though. So this is something which impacts all of us, right? And finance role has moved beyond reporting to understand how can we contribute to business, how can we make sure the business grows and stays resilient. So for example, how do we drive competitiveness? The first point over there, low single digit, that's the share of single supplier based sourcing, right? So once we have multiple suppliers working in our value chain, it results in cost competitiveness. And the number over here, and it's a daily job to find out and create a very, very strong supply chain by not having single source supplies beyond a point. Tax arbitrage on account of customs duties, taxes across countries. It's not about Nepal alone, right? No country is far away as we speak. I am from Kolkata, which is 1.5 hours away on flight. There's nothing which is far away from here. Clearly, another dimension which is coming out is in terms of inventory model transformation. And you will be, I'm sure all of you are aware of Nokia, right? There used to be a Nokia mobile phone in earlier days. Sadly, technology has, uh, I think, moved ahead of them. But Nokia worked on a business model where the packaging, right, the carton or the product in which the pack in which Nokia used to come, they used to maintain zero inventory. So their model was based on zero inventory of those packs by working on something called a vendor managed inventory. The first point. So we were the suppliers to them. And if they gave order in the morning, within 3 hours, they received the stocks. So that is how we get the supply chain closer to our factories, minimize inventory pipelines, and create a profitable business. Localization, right? While Nepal is a landlocked country, which comes with its own set of characteristics, we need to figure out a way. How do we localize, get things in Nepal, make in Nepal? Uh, Over the past couple of years, I think we have moved up here. We have worked on this paradigm to increase the local sourcing from X to 3X over the past 2 years. This helps in creating the economy in Nepal and also helping us by making the entire value chain most profitable, right? And that is what CEOs love to talk with CFO, isn't it? Rather than why is this or not that? Okay, can we do this? Is what if we say it makes life so much better? And can we do a local sourcing without compromising on quality? So that's the vector to build a resilient supply chain. I think the other point is when we go global, we need to also understand as finance, my work is not enough if I know CPI, WPI of Nepal. I need to know the country where the supplier is based, whether it is in Europe or US, how that country's inflation has moved. Because when he quotes some number and demands a price increase, what is the understanding which we have? If my marketing guy or operations is negotiating some machine purchase, how do we know that the price is right? He is saying the prices have increased in Germany by 30%. Price of this has gone up. So it is this area where we can contribute and create value for the organization. Uh, this is the second vector, which is in terms of risk intelligence. Let me take you to some, I think, a picture which makes sense. So this is an example of what we have done in terms of continuous controls monitoring. So, and the credit goes to the resource present over here. So every day in the morning, when I log into the system or when the factory finance logs in, they are very clearly able to see before a single rupee goes out from the company, are the payments which are going out all right or not? Is there any risk in the payouts which will happen today with a probability score and action to be taken very clearly coming out? So it's actionable dashboards, uh, which I think will help the organization maintain its agility. And this is one example. And this is coming from the whole principle, which at Surya Nepal we have is reviews should be exception based so that it drives clear action. And this helps us in defining a set of controlled health indicators across the paradigm to make sure the whole company is on the right track. These are some examples of the controlled health indicators. I'm sure as finance professionals, all of us spend time in these areas. But if we look at this from an exception based management, it will make life so much simpler. We know exactly where to focus rather than going everywhere. The other area where we have a role while we pivot ourselves as uh, in a more strategic role is by ensuring when we draft our policies or the standard operating procedures, they're very, very clear. If they are too long, nobody is going to read and understand. Then you need to actually use a chat GPT to create a summary of it. It needs to be very, very sharp, precise. And what we follow is a clear matrix of Rasi. This is the below is a example from that. Very clearly, this is for a master data creation, for example, as to what is it that the master data support team will be responsible for, who is accountable, who is supposed to be consulted and involved from a framework perspective. the other angle, right, is do it yourself. Nowadays, we all of us believe in this IKEA model of assemble it yourself, do it yourself. This is another example. When we create policies, while you may have audit as a function, here we are focusing on creating a culture of self-assessment, controlled self-assessment. So the responsible manager in the concerned function should be able to say at the end of the month, number of provisions I have complied with, and are there any issues in something, which will result in corrective actions being taken. The third vector, I think, and this is very much in vogue today, it's literally the talk of the world, not just the talk of town, being at the core of digital and the AI transformation, where there are a lot of words. I think if all of us were to take an exam today, unless the questions were MCQ, I'm not sure where the average medium score would be. Very, very difficult, but these are there. We have to live with it. There is no choice. Agentic AI, real time analytics, generative AI, data as an asset, data is the new oil, etc., etc. And the list can go on. However, from an actionable point, what have we done at Surya Nepal are the ones on the left. We have created a library of more than 150 bots, 50 over the past few months itself, web crawlers. We are investing in a distributor management system, digital workflows, ERP with mobile-based workflow approvals. You claim on the go, you approve things on the go, and a host of productivity tools so that the workforce efficiency goes up and we don't increase cost. Here is a quick fact check for you. Gartner believes that 87% of all finance functions will deploy at least one AI enabled tool by 2026, which is this year. And the CFO will be owning the investment, ROI, and risk. So I think this is a reality check. If we are not into it, we need to understand what is the path ahead so that we are right there on the curve. The fourth vector would be the pestle dimension, where on a daily basis, our role involves, right, understanding the political and the regulatory changes which have happened. How does it impact us? Us also being an FDI-based company, the number of regulations, approvals, amendments which keep on happening. One country, seven province. I won't even get into the number of laws which we deal with. So it requires somebody to be on the move, have a system which ensures we comply with all regulations, policies, because statutory compliance is non-negotiable. I have covered the point on economics, inflation, etc. earlier, social, ESG. Now, ESG is something I think over here the laws are evolving with respect to ESG, but trust me, we cannot avoid it. It will come. It's just a matter of time when all of us will be struggling to understand, and there are too many concepts in the area of ESG which we need to um, actually worry about. Tech, yes, we have discussed. Environment also covered. Legal also, I think. Now, here is the fifth point on how do we. I'll request Roshna to just ping me 5 minutes before. I have not worn a watch so that I can be in the flow over here. This is what a typical MIS looks like, right? Just think for yourself. Doesn't it focus on what happened last month? Is it not more structured for executives rather than accountants? Doesn't it end with showing a variance and then a remark talking about that itself? Too many lines, no clear stories. While it is difficult, but the task clearly is to drive a decision, and that report which drives decision will clearly explain what is going to happen next, what is likely, or what we call estimate slash outlook, right? It's organized around important question, links variance to an impact, and most importantly, it only focuses on 3 to 5 most important insights. What is it that we want this report? If a report is growing from the CFO, what is it that it wants the management committee or the board to focus upon? The 3 or 5 most important variables. With that, how are we doing on time? You're just nodding your head. Okay, how much? 12, no, minutes. Okay, thank you. So this is what I was referring to. I request ladies and gentlemen to please focus on this. Trust me, this is going to shape our future. These are the principles of BRSR, which the company has to report against. And it is without doubt that the finance leadership will have a role to play in this, right? The principles against which we have to report is how are businesses conducting and governing themselves in an ethical manner? How are we providing goods and services which are sustainable and safe? How do we ensure we promote the well being of employees, including those in the entire value chain? Are we respecting the interests and are we responsive to all our shareholders? How do we promote and respect human rights? How are we making efforts to protect and preserve the environment? These vectors require specific reporting by organizations today. And being part of the IDC group, I think these are all publicly available reports. I would urge this entire um, August gathering to look at this word BRSR and figure out it's going to occupy a good share of the finance time as we move ahead, not just from a corporate side. I also happen to just see our statutory auditor in the audience. Even from the audit side, this will be impacting later on. The next, of course, are the role of CFO and finance looking ahead. Let's do some crystal ball gazing here. 2030. So, what are the 8 forces which will reshape the finance function? AI, machine led decisions, do it yourself tech, finance talent crash. Actually, the challenge will not be availability of finance professionals. Challenge will be availability of digitally skilled finance professionals, people who understand big data. That's going to be in short supply. Matrix organizations, regulatory disruptions, decentralized decision making, controls embedded as part of our systems itself. I think this is what will shape the finance function. And I could figure out 3 or 4 set of 8/7s. So this is the first one. This is the second one. The 8 strategic pillars which can help CFOs as we look forward to transform our business enterprises. So, this is on data, right? By intelligence, insights, risk, talent, governance, sustainability, strategy. I think it's very clear. I think the whole point over here is the CFO orchestrates every dimension. This is actually an enterprise leadership model for 2030 and beyond, where all of us have a role to play. And what are these forces which are really driving it, right? These are the forces: automation, the volatility, which requires an agile response, investor activism, data explosion, too much of data. How do you make sense of that data? The key point being, like we say, Ramro CFO, right? Is one word I think we can use. So, Hamara CFO kaisa ho? This is what a CFO should look like. Should be data driven, tech fluent, strategic thinker, risk intelligent, talent builder, and definitely a storyteller. If a CFO is not a storyteller, nobody will listen to you. It doesn't interest or excite enough. I think we had covered this briefly earlier. The next CEO may be a CFO. I've put that in red because it's no more a question. It is a reality of life. I think the earlier speaker who was present over here has himself been a leader. And least if all of us need any inspiration, here I have got for you a set of CFOs who have actually gone on to become CEOs. And I believe the next session will be taken by somebody who has also um, undergone this journey of CFO to CEO. So these capabilities, talents, dimension, what we cover here apply to myself on a daily basis, and what I believe all of us should. I think nothing is far behind. This is the global, this is the national, closer home. This is what my team has done in Surya Nepal. So there are two chartered accountants who have created over the past 6 months a global product. This the name is Marani. This is for exports to US, Himalayan chestnut honey, and there is a website through which the whole thing is happening. And the message is above. This whole business has been designed and developed by two chartered accountants in Nepal. So, ladies and gentlemen, my learning and my message is nothing is impossible. The word itself says, right? I am possible. And all of us can do whatever we want to do as finance heads, as business heads, and possibly beyond this. Dhanyavad. Thank you. If in case we have a couple of minutes, if there are any questions, I would be happy to answer.
Hello. Hello.
Yes.
I'm Pallav Bandari. So I'm working in digital transformation landscape in here. So since you just mentioned that you have deployed 50 more bots last month, so that's very impressive. So while leading those projects, those tech-heavy projects, how deep does your team and you yourself be involved on those projects? I want to know that.
I think, thank you. That's a very good question. I think your question is when we do tech transformations, and I gave an example of 50 bots in last 3 months. What is the extent of my engagement, right? The answer is it is deep engagement. The message has to come right from the top that we need to do it. However, it has to be a benefit slash ROI driven, right? If I invest in technology, if I develop something, my question first is, what do I get back in return? What is the benefit if I do it? Am I going to use AI just because of that Gartner study that 87% of the firms will have at least one AI case to deploy? No. I must see benefit in that, and I must ensure clear accountability and responsibility after the benefits are clear. Then there is a team which does it with defined timelines and enough automations available today, which are all done at low cost, no cost, to ensure till the time the identified manager has completed the bot, I keep getting an alert. So and so has not completed this. So it requires a sponsorship, if you were to call it, right at the beginning of doing this, and thereafter a review, and ensuring that at the end of it, we are deriving benefits. Has it resulted in the concerned resource reducing the time spent? I'll give you one very good example. So, a lot of us today in ERP spend time in using some transaction code, right? T codes. You download some data, you do something to it, surgery slash lot of X lookup, V lookups. We keep looking up the data, H lookup. And then we arrive at something. This is my table. Actually, none of this we need to do. Whole thing can be automated, and it should be there in your email. After that, what you need to do, interpret and take action, is what should be our work. So this starts right at the top, sir. uh, it has to be part of everyday life and not without that. But thank you for this question.
Abhishek. So, thank you firstly for the very nice presentation that you had. There's a lot of things that we can learn from it. My question is with respect to the sustainable reporting S1, S2, IFAC, International Federation of Accountant, most of us are over here are the members of PAOs, and then we are just published the report a couple of days ago, which says that the sustainability reporting, S1, S2 reporting is widely accepted and then getting lots of result. Your slide on BRSR is something that India has done, which India claims that they are ahead of the world in this BRSR. I just wanted to actually tell the audience that this is something, as you mentioned, we should search for it. It's all the principles are all there, and it's not wrong that all of us have to work for it. My question is, what at ITC? Because I understand first 1,000 listed companies in India has to report, and you are one of them, so that's why you are the top 10, so you have to do it. So what basically, as a CFO or vice president, whatever finance, above that, what you are actually doing and what our members should be actually learning something basic skill up that they need to do, because accounting standard board here in Nepal is going to roll out S1, S2 this year. The draft would be coming for public consultation. I believe in a couple of years' time, we shall be, especially the listed ones, have to report.
Thank you, sir. I think I really appreciate, I think, the progress we are making in this direction. So yes, you are absolutely right. This requirement is for 1,000 companies going ahead. So what ITC has done is ITC has worked on those parameters 1 year ahead of time and got this in place. What do I do? So first thing, I have done myself a course on BRSR to understand the whole thing. And actually, it's very interesting. This course was organized by ICAI. The qualification of people who attended this course, the diversity in that was amazing. From an engineer to an MBA to a chartered accountant to a cost accountant. Different companies had different people looking into this area. Why? Because there is nothing so specialized about it, is one understanding. All of us need to do it. And the one reason, sir, is I think as finance people, our role would be to figure out where is this data coming from? Is this data correct? Because for BRSR, lot of data will be offline. It will not be ERP or a software based data. That is where the entire challenge comes in understanding new technology. One risk which I definitely had over there is we should not be then chasing those KPIs. They should be an outcome. The important thing is, as CFOs, I need to understand those standards, have a path of where we are to where we want to be as a company, and try and improve those. Matrices will improve by itself. If we are only focusing on those metrics, I think we'll be left far behind, even where compared to we are. But this has to be done, and I'm very glad to know that we are going to progress. I can assure you, Surya Nepal over here would be, not far behind when it comes to adopting these and being ahead of the curve. Thank you, sir.